Hi there, my name is Aleem and I am a mortgage broker in the Lower Mainland in BC, and I appreciate the time here today to speak with you. If you are a home buyer, I want to offer up some food for thought and share some experiences on what you need to be aware of when you are a home buyer considering writing and buying a property and looking at a subject free offer, also sometimes referred to as going in with no conditions or the firm offer. So, what's the number one stressor out there right now in the real estate buying world? Is it the 15-minute showings starting at 6 a.m., where you only get 15 minutes to view a property and then you're out and on to the next group? Is it the general lack of any properties to look at? Is it the fact that we are essentially not being given any time for an inspection, an appraisal, or any type of financing clause? Or maybe it's those 23 offers that are going in as well at midnight. Yes, midnight, because midnight seems to be a prudent time to make a decision on what is likely the most significant financial decision in your life. The whole system seems to be a little bit, for lack of a better word, nuts. And the whole system is actually a little bit frayed as well, as we are experiencing 40-year record high volumes month after month after month. For me, from what I'm experiencing in conversations with clients, especially as together we begin to unpack and dive into the financing process, it really becomes mind blowing that we are allowed and, quite frankly, heavily pressured into writing a binding contract to purchase a property really don't know much about. And before I continue, I want to be very clear here. This is not a realtor bashing session. Realtors are not to blame. Right now, especially, I feel the pain for realtors, and you should too. They have to show 43 homes. They have to write offers 23 times before they finally get an accepted offer. Realtors in this market, they hate this market, and so they should. We should all hate this market. This is not good for anyone. No one is winning except for that seller of the home. And guess what? They become a buyer the next day in 9 out of 10 cases. So back to what I was initially saying. There is intense pressure for us to enter into a binding contract to purchase a property that we really don't know much about. A property that we think and hope will be financed by some other institution. And the process of financing, well, we really don't know much about that either. As a buyer, we are told that we are pre-approved. Now, here's a little bit of news. If you were pre-approved in 60 seconds, guess what? You have a rate hold and that's it. And even then, you may not even have a rate hold. Because the bank may not like the property. The property really does matter. Is it a 55 plus property? Is it a co-op? Is it a city land lease? Is it on First Nations lease land? Is it on Crown lease land? Is it a boat access only? Unless someone actually ran a credit check for you and reviewed that credit report in detail and collected a number of related documents such as job letter, pay stubs, recent T4s, last 2 years CRA notices of assessment, you aren't even halfway towards getting pre-qualified. Then there's the question of your down payment, and the origins of that down payment matter more and more than they ever did before. So what seems to be so simple might not be that simple once the heavily scrutinized banks, they have regulators lurking all over them, watching what they do. Once they get the opportunity to go through their approval process, they're going to be going through all of your documents and such. Now, even with that list of documents that I just listed off, even with those reviewed, you're still not qualified or pre-qualified for guaranteed financing on any kind of property. And ultimately, anyone suggesting to you that you are 100% okay to write a subject-free binding offer on a property, there's a 99% chance that they are failing to give you an accurate and full picture. Because unless you have a boatload of cash and you are able to pay cash for that property, and you are depending on a bank to give you money, the property itself matters, and it matters a lot. As a mortgage broker, before giving you or your realtor the thumbs up to write a binding offer, we've got to consider a lot of things. And before you, the consumer, move forward, you've got to consider some things too. Consider this. Now, there's never been a better time to unload some problem properties. Cracked foundation. Now, they can be found all across Canada. No foundation. They can be found in some parts of New Westminster. Hay bale foundation in Alberta. Oil tanks in the front yards. That's a Vancouver thing. Bodies buried in the backyard. That is a legitimate thing that an Ontario appraiser uncovered in the backyard of a house in Guelph, Ontario. Now, it was a family-owned burial site, but still. Is the property on floodplain? Is there irreparable flood damage or water damage? Is there unrepaired fire damage, insect damage, pet damage, infestations? Is the property haunted? Is it a former grow-op? The list goes on. Is it an active grow-op? A former meth lab? An active grow-op because, hey, it's legal now to grow some weed, plants, and all of that. And yeah, but it's a problem for the financing, though. Lenders don't really like finding any type of weed growing in the basement of any of the properties that they're looking to secure a mortgage against. Active meth lab, there's no showings happening right now, so why not, right? Well, that's a problem as well. Asbestos in the basement, lead pipes. Oh, the lead pipes were replaced. Oh, great. No, wait, they were replaced with what? Poly B? Vermiculite in the attic? Well, what's that? You have a property with all of these issues? Well, guess what? These once were properties with problems, but problems no more. Now such homes are selling in bidding wars to people that haven't even set foot inside them. And they aren't going to sell for just tens of $1,000s more. It's going to sell for hundreds of $1,000s or more. And how is it going to be financed once the dust is settled? Well, someone's going to have to figure that out. And if your belief is that you have been pre-approved to buy whatever you want because you are awesome, you have great credit and are well qualified, you are in the most dangerous position of all because you have the false sense of security. You are 100% not approved for financing on any property with anything mentioned in the list above. Among dozens of other issues that can arise, there are strata problems. Now, the strata property scenario that are coming up these days, that's a whole other thing. Pending litigation, water ingress, building envelope issues, leaking parkades, skyrocketing insurance premiums, thus the increase to condo fees, and the list goes on. Now, what if you are putting less than 20% down? That means that you must owner occupy the property from day one. You require vacant possession, which actually isn't a thing that you can easily get in certain situations because tenants, well, they have rights. You may be pursuing 90 or 95% financing on a property that is tenanted, and the tenant has the right to hang back 3 or 4 months. And if that is written into the contract, well, you're not getting financing because now that is a rental property and you need 20% down or more, even though your intention is to owner occupy it. And lenders, they used to underwrite. By underwriting, I mean that they used to review the documents, and these pre-approvals, they used to mean something, and they don't do that anymore. And because all they really can do is they can approve you, which is what initially created the mess that I just listed off. Because we know you are good to go, but all too often it's the property that becomes the real issue. And when you have gone less than 20% down, you don't have 33 different lenders that you can go to that can save the day if one of them does not like it. When putting less than 20% down, you are dependent on mortgage insurers in Canada. There's CMHC, Sagen, Canada Guarantee. Those are the three. And really, CMHC is kind of the odd one out right now because they've got their own super tight rules. So you've really only got two options if you're putting less than 20% down. That's a lot of risk to take depending on one or two people to say yes. Now, once again, to be clear, there are no guarantees in real estate. It's caveat emptor, buyer beware. You need to be aware and conscious of the risks of writing a binding and unconditional offer. Number one, there's no guarantee that the appraisal will match the price paid. And when the appraisal doesn't match the price paid, you need to come up with the cash to cover the shortfall. So your realtor has said that, hey, in the last 40 years, they've never seen an appraisal come short. Ask them how many years in those 40 were they looking at a property that was listed for $899, sell for $1.3 million. That's a problem. It's not a common thing, it's an uncommon thing. And that cash that you have to come up with in this scenario, you can't borrow that from anyone. You have to have that cash available from your own resources, because any additional debt is very likely to mess up the ratios for the mortgage that you were trying to apply for. So then, of course, the $1,000,000 question, in a world where we have so many different laws to protect us from ourselves, why are there none to protect us around purchasing used real estate? You have to wear a helmet when you ride a bike. You have to wear a seatbelt when you ride in a car. Heck, you even have 90 days to decide whether or not you want to keep that toaster that you bought. So why is there zero consumer protection with the single largest purchase that you're going to make likely in your entire life? Unless, of course, it's a new build, in which case you do have a 5 to 10 day cool off period to get your financing in place, depending on which province that you are in. But what do people do in the case of new builds where they do get the 5 to 10 days? Well, a lot of them are doing nothing. Now, they don't take that contract to a real estate lawyer for review, because you wouldn't want to spend $200 or $300 on a lawyer to review a contract for something that you were about to pay $1 million for. Many times they don't even read the contract themselves, which is a real problem. One note is one of the builder's contracts that just came up recently. No holdbacks unless authorized by the builder. And even then, that holdback was going to be triggering a 24% interest payment on the money outstanding. And what did those clients need to hold back for? Well, they needed to hold back for a detached garage that was not even built yet. The builder said, too bad, you pay full price anyways, even though it hasn't been built yet, or else we keep your deposit and we sell the home to somebody else. Because, of course, the contract was from a while back, and the new market value for the property, if the builder was to sell it again, would be much higher. So the builder was happy to get out of their original contract. Now, is a lender going to give you financing for something that is not built, i.e. a garage? Let's say about $20,000 in this case. No, the lender is not going to give you the money for this. And then you go back to the whole issue of where you are going to get the money from. These are the types of situations that occur fairly regularly in real estate, even with new builds. But who's supposed to read the contract? The client? Arguably, for sure. The lawyer on behalf of the client? Absolutely. The realtor? Sure, we could say that, but the client didn't have a realtor. Why? Because they walked into the sales center and dealt with a representative of the builder and had no representation of their own. Now, they think that they're going to save a few $1,000s, thinking that the builder doesn't have to pay a commission and they can transfer the savings over to them. That will not happen. Most builders have a program where they have the money set aside to pay a realtor. They don't give you that money if you don't have one. They just keep that money for themselves. So who else should have read the contract? The broker? The lender? Yes, sure. But they never got the chance to read the contract because it was not sent into them until about a month before the completion of the transaction, over a year after the original deal was signed. No matter what, the lender reserves the right to pull your financing up to and including the day of funding, even after they say all conditions are met and everything is good. There's still risk. It's a whole other story about the crazy things that people do a week before completion that could lead to a lender pulling financing, like quitting their job, the one that they used to qualify them for the mortgage, or going out and leasing a new car, a new boat, you name it, leasing new furniture. We're often our own worst enemies, and that is the big issue. Thank you again for your time, and I hope that this presentation was helpful. If you have any questions or concerns, you can reach out to us at themortgagespecialist.com. My email is aleem at themortgagespecialist.com, and our phone number is 778-233-2377. Thank you again, and have a wonderful day.